Welcome back. And now for some fundamental analysis of the numbers that went by and, of course, the big number that's coming in today, Reliance Industries. SP Tulsian of sptulsian.com joins us. Good morning, sir. Thank you very much. And greetings of this season, Ashtami, Navami and Dashami greetings to you, Mr. Tulsian. To get back to business, what's your take on Hero Motor numbers? We discussed Infosys a bit, but Hero Motor, do you think there is enough in it to buy the stock at all?
Lata, first festive greetings to all of Ashtami, Navami, Dashera, and you are right that this is the second biggest festival ahead of Diwali. So let's pray that the prosperity and the turnaround which we have seen in our market continue from here, that we have seen on the first day of the Pratipada, and now we are seeing that happening continuously. So all the best wishes and prosperity for all my colleagues at your and all our viewers. Coming on specifically on Hero Moto, because if you really see the situation for the company, if you are clocking a sales of 21 lakh vehicle per quarter, you are bound to see some kind of margin shrinkage, and that too when the commodity prices are seen on a rising trend. If you take a YOY, you may say that yes, 220 basis point fall. On a sequential basis, the margin has fallen to 15.2% from 15.4%. But I'm not worried on that, because in fact I've said that last week also, that it reminds me of the Dhanteras day last year when Hero Moto clocked sales of about 3 lakh vehicles in a single day, and we are approaching that Dhanteras again on 5th November. So I think the situation is going to remain quite robust. Won't be surprised to see the sales figure for the November, I'm not referring to October, touching closer to about 8 lakh vehicles also. So you have to read that if you are having the market share, or you are keeping your market share intact, you have to compromise the margins, because there have been many kinds of headwinds in terms of the credit, in terms of insurance issues and all that, which are in fact forcing the manufacturer to offer some small discount. So overall, the numbers are seen to be quite good, because it was expected that probably the net profit range will be somewhere between 910 to 930. And that has come out much higher by about maybe 50 crore. One may argue that the other income has been instrumental, but I think one has to read in toto, and even on the margin front, as I said, that I don't think that YOY contraction in margin is relevant. It is more a QOQ, which is in at 20 basis point, which seem to be a calculated move. So overall, good numbers seen from Hero Moto on the Q2 results.
Mr. Sam, good morning. The other stock to watch would be ACC ahead of numbers. How would you approach that stock?
See, Anuj, always the Q2 numbers are seen to be flattish for cement company. But I have been, in fact, if you recall for last 4, 5, 6 days, in fact, we have been taking an extremely bullish call on cement industry or the cement sector. And in fact, ACC has continuously been showing an improvement. If you take their 4-quarter numbers, in comparison to Ambuja Cement, the peer company or maybe the holding company. So, taking all that into consideration, I don't think that one should really expect too much from Q2 numbers, or maybe in the case of ACC, it is Q3. But, going forward, the overall situation for the cement sector is seen quite positive, and maybe, you may have some kind of caution, but I don't think that share price will correct even after the declaration of the results by ACC. And so keeping extremely positive view, because you don't have any, you in fact have all the tailwinds for the next 9 months for the cement sector till 30th September. And the kind of growth which we are expecting for the cement consumption is closer to about 8 to 9%, which in my view won't be surprised to see hitting double digit, which will give a lot of advantage to the larger players like ACC, Shree Cement, Ambuja Cement, Ultratech, India Cement kind of stocks.
Okay, Mr. Tulsian, good morning and greetings of the season to you from me as well. Today is a big day because Reliance comes out with its numbers. Is there anything in the fine print of the numbers that can cause a move in the stock either way, or do you think it will be more of the same?
No, Sonia, in fact, one has to really see the volume increase in the petchem segment. No doubt that the petchem segment is going to perform quite well, because if you see the 9.2 million ton, for the Q1 and for Q4 of last year, so probably there, because refinery off-gas cracker is really seen giving extremely the margin expansion for petchem segments. So the same kind of things are seen there, and in fact we are expecting a bit of petchem to be at about 8,130 crore. Now coming on refinery segments, people are little cautious, but I don't think that that's the situation, because if you see the Singapore benchmark, that has increased by about 10 cents. and that will be seen reflecting in the company's performance also. And we are expecting GRM to be at about $10.6, which was at $10.5. You know, maybe the light heavy crude differential is seen having shrunk, but I don't think that is much relevant now for the company, for Reliance Industries. And going forward, in fact, the kind of growth, you know, which it will be very interesting to see the retail and Geo both, you know, because if you see the situation going forward, retail is seen to be doing quite well. We are expecting the sequential increase. Maybe the margins will get impacted, you know. So overall, PAT of about 9,660 is expected from the company, and I think that share having corrected, in fact, that is the advantage, you know, for the stock price to move up from here on. So results are likely to get cheered by the market, seem to be quite good, and we are keeping positively on the share price post results also, because generally we see the share price correcting, but I don't think that this time situation will be there, because we are expecting the price to move up to 12.20 maybe in the next 3-4 days post announcements of the numbers. So overall, good expectations. Petchem better numbers, growth in the retail and Geo, and flattish kind of performance in refinery, and we are not expecting any kind of fall in the refining EBIT margin as well.
Okay, sir. Of course, we will be taking your advice when the numbers come in as well, but that's a mammoth profit number that the street is working with for Reliance, 9,700 to 900. That's the expectation. Let's look at one more result that came overnight. Shakti Pumps, yes, a smaller company, considering that we were speaking about Reliance and Infosys earlier. But Shakti Pumps' numbers are fairly impressive. Revenue has doubled, and even EBITDA has doubled, though you may squabble with the margins. But let's get the management. Akhilesh Maru, the CFO of Shakti Pumps, joins us on the phone line. Akhilesh, good morning. Thank you very much for joining us. Did you have a one-off, a capex or something? How come the EBITDA and the revenue have doubled?
It's not a kind of one-off capex. It's growth we were expecting, because there are some orders which we expecting in this quarter as well as in coming quarters. So as we enter into government business, it is like whenever government has money, take the maximum exposure, take the maximum order book from the government and execute as early as possible, so you can go ahead with that. So nothing other one kind of.
Okay. But I mean, how are the receivables? Are you paid on time?
Yeah, we are paid on time. Whatever 90-100 days is our criteria, we are within that.
Okay. So what are you looking at in terms of an overall revenue growth? I mean, for the first half of the year, you're sitting on a base of almost 234 crores. How much do you think you can do by the end of the year?
This year, our expectation is of year-on-year basis of 20-25% growth. Because as I said, the 1 or 2 quarter may be really bullish, and another 1 quarter may be of, let's say, a flattish or a very normal kind of growth. So 20-25% is a fair assumption for a yearly growth.
So does that mean you're revising your guidance higher? Because last time you had indicated that it will be 20%. Now you're saying 20, maybe even 25%. So can we assume that you have a much more optimistic view than you gave us before?
From 20 to 25%, it's not much more, yeah, but on a little higher side, considering the response we are getting on a tender project or from the OEM side, I think 20-25% is the right number.
Okay. Your finance costs have gone up.
Yes.
Is it something that you can take in your stride? Will they rise even more because there is a liquidity crunch in the market?
No, it is... our debts on a little higher side this time, and considering the turnover and the top line growing, we have to increase little working capital also. So it's not going to be much higher. I think that's the highest level.
What's the order book of the company currently, and what is the order visibility over the next, say, 12 months?
The order book per se, we don't have order book, because our orders are in a phased manner, and on a consistent basis we keep getting order in 7 days, 10 days, 15 days. But as we are we are already entered into many government tenders. We have allotted to some around 7,000 to 8,000 number of integrated solar pumps. So we have done only 3,000 till now.
Okay.
So any price hikes that you've undertaken recently?
No price hike.
All right. Okay, we'll leave it at that. Thanks, Akhilesh, for joining us and giving us your view. So that's the word coming in from Shakti Pumps. They expect a 20 to 25% revenue growth by the end of FY19. And it's been a really good quarter for them this time. Mr. Tulsian, any quick thoughts on Shakti Pumps? I mean, the last 6 months, the stock has halved. It's down almost 50%. You think this is a good buying opportunity?
Sonia, I think this is an excellent buying opportunity because we have been in fact giving the positive view. They are the world's largest submersible stainless steel pump makers, and the solar pumps and drip irrigation equipments and all that with a capacity of 5 lakh pumps per annum. And in fact, if you see the situation after hearing the commentary, in fact on the working capital front also, the debtors are seen at about 140 crore, which was at 140 crore as on March also. And yes, the working capital has increased by about 20-30 crore. But if you see the finance cost also overall, for the 6 months, it has just increased by about 20% when you have an increase of turnover top line by more than 50% on a YOY basis for the quarter. This is bound to happen. So, we are taking an extremely positive view. And in fact, the EPS of about 9 rupees, in which we have seen in H1, or maybe sub 9 at 8.7 is likely to exceed to about 2021. So this is an excellent stock. I think we are in fact initiating. We have in fact given buy call in the past, but now having corrected and after seeing the Q2 numbers, the stock is looking really very good.
Thank you for that, Mr. Tulsian. Coming back with more questions after a very quick break. We'll also have the pre-opening rates.